Hi, it's Charlie giving you Monday's market commentary. Hope you're very well. I'm actually recording this Sunday evening. So, have we got a crash coming in the stock markets more than we've been sort of just correcting in this these last week or so? It's got pretty hairy out there. Let's go into that analysis in a moment. Before I start that analysis, I want to quickly run through just one thing with you, and that's about trading account sizes. Because I hear stories of traders who put like £200, £300, £400 into a trading account and are trying to trade with that. Because obviously brokers can facilitate trading with such small accounts. And that's fine for some traders, but I think there's a potential problem with other traders in that what I'm hearing is you get traders, they put a few £100 into a trading account, they trade with too much gearing because otherwise it's really boring for them. So they trade with too much gearing and then periodically just blow the account and then just think, well, it's only a few £100, I'll put another few hundred in. And then they go through that cycle for years, they can do. And ultimately they've ended up putting thousands in. And I think it's one thing to be wary of just putting a few £100 in, because you don't respect the money in the same way as if you go and put a couple of thousand in. You respect the money a lot more if you have a larger amount of cash in your trading account, rather than if you just put a few £100 in. You have that mindset, oh well, if I lose it then it doesn't matter. So whereas if you put a few thousand in it, you're more likely to trade proper according to proper risk management rules and everything else, and respect that money more rather than just trading with over leverage and blowing it up. So that was just that first thought, because it was in my mind from heard a story about a trader who does this regularly, puts a few £100 in, he can double it because he'll trade with high leverage, double it in a week or whatever, or a few days sometimes, but then he'll blow it all and then start again. And I thought, okay, let's just cover that one off. Right then, so the markets. First and foremost, before I go through overall views, let's have a look at some of the internals, the stock market internals here. So we're going to start off with the TRIN. This is the short-term trade index, the TRIN, and the TRIN tells us basically how near-term, if we've got any near-term extremes in the markets, and anything a close over 2 is indicative of usually means we're close to a low. Anything over 2, it's about a 60% hit rate on this. That within a day or so we're gonna see a bounce. So we're very, very close as far as the TRIN's concerned to having a bounce. It's closed over 2, and normally a close over 2 does mean that the following day or within the next 48 hours there should be some bounce. So we could expect some sort of bounce coming as far as that's concerned. Let's have a quick look at the McClellan oscillator, and for you long timers, you'll know that we've always used a minus 200 reading on McClellan oscillator. If it drops below minus 200, then again it tells us that we're getting to short-term oversold territory. Effectively, that's what they're doing. So we haven't quite got there. I'm amazed we haven't, but we're only at minus 174. I'm amazed with the sell-off we've just had that we've not. So we've got a little bit of conflict there. We've got the McClellan oscillator is not oversold just yet. It's getting close, but it's not there yet, and yet the TRIN is. So very quickly, what we could be seeing is maybe a bounce tomorrow, Monday, but the McClellan is not necessarily saying that we're oversold just yet. Okay, so let's actually go and have a look at the stock markets themselves, and let's have a look at the S&P 500 to start off with. Oh my God, do you know, it's funny because I'm not trading the stock market indices myself. I've missed out on a lot of this. It's 2 huge days, really. It's all been done in 2 days, isn't it? Really, this breakdown as far as the S&P is concerned, and 3% down on Friday, and I think it was 2% down on Thursday. But really, most of this year, the S&P and the Dow, they've been pretty sloppy behaviour, really, since the spring. Didn't really make marginal new highs into May, but just sloppy price behaviour. So I've just not been trading them because of that horrible price behaviour. And so, yeah, I've missed out on trading all of this, and I'm just trading my currencies lower risk. And not as volatile. So talking of volatility, let's quickly, before I'll come back to this, but let's go to the volatility index itself, the VIX. So let's take this out to a weekly chart to put this in perspective. We can see that throughout the whole of 2015 we've generally been trading way below 20. and a lot of the time, even if you look into last year as well, we're generally, as you can see, trading below 20 for a lot of this time, back into 2013 as well. And but occasionally we have these spikes. So the volatility index has obviously spiked on this with this movements this week. So it's spiked up to 28 now. So again, 28 is not obviously the highest it can go. If we go back to 2011, we see it was up at 50, and back in the real height of the crisis, it was back over 80. And I don't expect that to happen. So it's reflecting that we've got a bit of volatility at the moment, which we all already know. So let's take us back to the S&P, being the broader index. If we can have a look at the FTSE as well, just take this to a daily chart on the FTSE. The FTSE's been falling for longer, as we can see. So where do we go to from here? Well, I think as far as the US indices are concerned, and it will be reflected in the London market as well, I think in the short term, like I've just said, we are getting close to being or at there or thereabouts being a bit oversold. But as it stands at the moment, any bounce in this S&P, any bounce, if it does bounce on Monday, and let's say we have a decent bounce, we could very easily, when you get volatility like this, the volatility can swing back up in quite significant ways as well. We could see easily a 30-40 points, that's a 300 to 400 point rally in the Dow S&P early next week. We could do, but if we did, I think it's selling. It's a sellable opportunity because the momentum's to the downside. If we were to have an update on Monday, then I think it's a selling opportunity if we start getting a bounce. So overall, then I think we're a little bit short-term oversold. We could just come lower again. Fine. If we stretch our legs and go lower again tomorrow, then so be it. But we are getting short-term oversold. As far as my analysis is concerned, overall, if I need to go out to a monthly chart, in the grand scheme of things, if we go to the monthly chart, this is not really that much. It's not that big a deal. We have to put it in context. We've been making these new all-time highs, which we did again this year. So it's just a normal sort of correction. That's how I'm seeing this. Don't get me wrong. How much could we correct? I think we could easily see the S&P back down at 1700, or that thereabouts, 17 to 1800. We could see a move which is decent, but I'm not seeing a major bear market. But then I've been wrong on those sort of things before. So that's how I'm looking at it. I think we're just in a correction. I think it's a normalized correction, a bit like we have periodically in any bull market. 10 to 20% correction. It's more than healthy for a market. So I was asked about this. Someone emailed me yesterday asking if I could do my analysis on the stock markets. So there it is. That's about it. I've just used the S&P as the broad index indicator. So very, very short term, I think we're close to a bounce. If we get the bounce, I think it's a shorting opportunity for those of you who are short-term traders. I don't think this is over just yet. But the difficulty is the volatility. If you come to a daily chart, it's like, okay, if you do short, you've got to be able to have you've got to trade at small stakes and so that you can have wide stops, because you're going to need them because it's quite volatile. Anyway, I hope that helps. Have a great week. I'll be back on Friday for live trading.